Oh, baby. Intel stock, we were talking about it. We were excited. This is one we were looking at. Really excited to look at for a lot of reasons. I said early on, I thought that the analysis was quite unfair with this company. Analysts were giving this thing just a bad rap for no reason. They were expecting a decline in sales of 15%, and I stuck my foot in the dirt and I said, no, that's going to be an even quarter. This quarter, it's going to be even. It was a bold prediction. Bold prediction. The stock's down 5%, which might make you lead to believe that maybe that 15% was right. But I did some peeking. I'm just going to tell you right now, the man was right, okay? Shares were up originally. Ended up down now. Why? I don't know necessarily why. I don't think that's quite a fair reaction. We'll look and see if there's more data, but overall I said an EPS beat and a revenue beat were likely. I said revenue was going to be even. It ended up down 1%. Not too bad. So a non-GAAP EPS of $1.52 beats by 41 cents, and a GAAP EPS of $1.42 beats by 38 cents. Really nice in that aspect, and a revenue of $20 billion is down 1% year over year. Pretty close to even, way better than the 15% down that they were predicting. Beats by $2.5 billion. I had a good feeling. I had a feeling in my jellies, okay? They expect quarter one revenue of $18.6 billion and quarter one EPS of $1.03. Now, I think potentially, I don't know. Personally, I think those are actually good estimates. If you talk about the quarter ahead being Q1, I think those are actually pretty decent estimates for them. Their guidance overall is certainly above estimate. Their guidance overall is above estimate. I don't know what else you want me to say there. Consensus is only 16.36 million, and they're saying non-GAAP they're going to put up 17.5. That's over $1 billion more in terms of revenue, and an EPS consensus is only 87 cents. They're expecting $1.10. I don't know about you, but that seems a little crazy. Where's this stock down? Let's see. Let's see if we can find some more stuff. This quarter was the last hurrah for Bob Swan, set to be replaced by VMware CEO Pat Gelsinger on February 15th, and maybe that could be part of it. I can't lie. Obviously, Bob Swan on the way out, new CEO, could be concerning territory. So, guidance was only $17.4 billion for this quarter. They put up $20 billion, really good. Guidance was only 42 cents EPS, and they put up $1.52. That's an incredible beat on this quarter. Intel had forecast PC-centric revenue decline in the low single digits, but CCG posted $10.9 billion in sales, which was actually up 9% year over year, topping a consensus of $9.6 billion. Really nice. That's really good. Data Center Group posted a 7% decline. Intel data-centric sales fall to 25% in Q4, or fall 25% in quarter 4. So maybe that's why. Data center sales falling. Data center posted an overall 11% revenue drop. Data center as a whole down 16% to $6.1 billion, still above the consensus of 5.4. What can I say? That's not bad. Mobileye was the only data center gainer at 39%. And Mobileye being, to my knowledge, the autonomous network company, the ones that are working on autonomous taxis and helping people with autonomous driving, all that. So good to see that doing well. For quarter one, obviously we saw those expectations way above consensus. Caused AMD and NVIDIA rising as well. Pretty cool. That's pretty cool stuff. We also saw an increase in the dividend of 5%. Are you kidding me? Currently yielding 2.24%. That's incredible. That's incredible stuff. So you see overall, Intel, let's look at these slides. This is the 5th consecutive record year. They exceeded the October guidance on revenue by $2.6 billion, obviously an EPS by 42 cents for a record full year for CCG, DCG, and NSG and Mobileye. Record year for all of them, meeting strong customer demand. Q4 PC units growth up 33%. Growth was up 33% in the PC unit category. That's really crazy. Ramping SuperFin technology and 3 HVM fabs, 10 nanometer supply unit growth up 4 times year over year, and strong progress on the 7 nanometer weld. Ice Lake server is now shipping. Alder Lake and Sapphire Rapids sampling to customers now. Highest ever free cash flow, raising the dividend. Beautiful stuff. Obviously focused on improving the execution with the new processors such as the Ice Lake, now Rocket Lake going out there in Sapphire Rapids. Also Alder Lake, which is the first 10 nanometer CPU for desktops, is sampling now. See how that goes as well. Priorities, obviously, around $6 billion revenue from networking. They're about growth. Delivered gold release of one API developer toolkit, Mobileye, which is really cool, going on there for some test vehicles in 4 new countries, 13,000 developments of Intel Internet of Things market-ready solutions. I mean, this is great stuff. And their capital quite smartly deployed. $19.8 billion returned to shareholders in 2020. Really nice. For financial highlights, you see overall Q4 revenue is $20 billion. Really good. Operating margin was at 31.5, which is down 4 percentage points year over year. 5 percentage points above expectations still. Really nice. And you saw, I mean, look at this. Look at the rise here. Really good. Overall revenue rising year over year consistently. EPS rising year over year consistently. I love to see that. EPS overall quarter over quarter remained flat, and a lot of that was due to a decrease in operating margin. Free cash flow, you saw some growth from the data center group. You saw overall there was a decline. Obviously, challenging macro and competitive environment. And cloud digestion cycle, partially offset by adjacency growth on other continued strong 5G ramp. And again, 5G could be really big for them as well. These are good numbers. They give an outlook number here, but I'd also like to look at the press release real quick just for the balance sheet. So we see overall, from a year-over-year perspective, we see total current assets sitting at $47.2 billion, and that compares to year-over-year $31.2. So that's a big growth of $16 billion on that line there. Total assets in general at $153 versus $136.5. So again, you see that massive growth, mostly because of total current assets really paving the way in that aspect. Liabilities. Total current liabilities are sitting at $24.7 billion compared to $22.3. Now, overall, long-term liabilities in general, you definitely see there was overall an increase, but not nearly as much as they increased assets by. So total stockholder equity sitting at $81 billion compared to $77.5 billion of the year prior. This year has been a very challenging one, but they've grown the balance sheet quite a bit, and equity is doing really well. I gotta be honest, if we were talking about buying this stock, I frankly think this stock at under $60 is a buy. We're talking at a P/E ratio under 15 on this company, which seems incredibly cheap for what they're doing. Market cap sitting at $255 billion. Again, you can say what you'd like. If you look overall, I mean, everyone wants to look at the presentation, but for the full year, they put up nearly $78 billion. So $78 billion in revenue with a market cap of 255. We're only really talking a little bit close to 4.5 times that value. Really only 4 times that value for the most part. A little bit over 4, but that's really good valuation for this stock. And a P/E ratio, pretty dirt cheap. I think this stock's worth taking a look at, especially with a raise in the dividend and the balance sheet in great shape. If you're not into the stock already, I think it's worth taking a look at, honestly. Yeah, I mean that's my opinion. If you see something I didn't, let me know. But this stock's worth taking a look at, boys, and we're gonna buy it, baby.